What's up, traders? This is Okana here, and I'm going to show you a strategy that was created by the Geek, Michael, from binaryoptions.psych. You might know him from other articles. I can show you here. As you can see, if you look him up, he has done lots of article reviews and written articles before, so you can check that out. But today we're going to look at his strategy that he created, called the Geek Simple Moving Average strategy. Unlike the name Simple Moving Average, it does not use a simple moving average. It uses exponential moving averages, but since it's simple to use, he calls it Simple Moving Average strategy. So hence the name. And if you're not familiar with what moving averages are and how to use them, how to insert them on your charts, you can check this article out. I will put the link below, and there's the video is on our channel. Just look for moving averages, and there are multiple uses, and you will see the video, or you can check it out here. Again, I will put the links below, and you can check it out. It explains the various the different types of moving averages that you can find on most charting platforms such as MetaTrader, and how to add the periods and which methods to use, and so on. So once you have done that, if you're not familiar with moving averages, once you have read the article, we can move on. Again, it's a simple strategy. It uses a period 30 exponential moving average, and we use only two time frames, a daily time frame and a 30-minute time frame. So we're looking at our charts, and let's check it out. Let's set it up. First, I'm going to show you, if you have MetaTrader, you go to Insert, Indicators, Trend, and Moving Average. Period 30, as I said, which means 30 days if you're looking at the daily charts. Choose the exponential method. Choose a color and then press OK. So you can see we have the moving average here. And we want to start on a daily chart, and we want to confirm the trend. So let's state the obvious here first, because it's important. So what I want to say is that Michael doesn't just trade based on the indicator. So he doesn't just take call options or put options because of the indicator, but he considers what the candlesticks, what the price action is telling him, what the trend is. So you got to do those analyses, and he makes sure to tell us that in his article as well. So price action is important because you want to see where the targets are, where the important targets are, and I'm going to show you in a moment why that's important and how we can avoid false signals if we analyze price action and don't just rely on indicators alone. So let's look here. We have a downtrend because the candlesticks drop below the 30 bar moving average. As you can see here, this is the moving average. So once price is below the moving average, the trend is bearish, right? And after that, we want to go to a 30-minute time frame and start taking trades. But here's the thing. Now let's zoom in a little bit so you can see. You can see the first drop. This candlestick actually closed below the moving average, but then price continued up for 1, 2, 3, 4, 5 days before it finally closed below the moving average once again, and this time it was confirmed. So how could you have avoided this false breakout, or how could you have known that there could be a possibility for a bounce here? And this is where the price action comes in, again, as Michael also suggests and recommends price action for this strategy. And let's simply look at the charts. What is the first thing we see here when we look at this chart? Let's suppose we don't see anything past this line that I placed here. Okay, so price is here, and we are waiting for and as this candlestick was dropping, we are waiting to see whether the trend is going to be bearish or not. So we didn't know what was going to happen to the right, but what we could know, if we would look to the left, and we would place a line based on the previous bounce here, the resistance here, the support in this area. Now it's obviously it's an area, not just a line. So as you can see, you can place it here because we have the big retracement down here, and then price continued up. We have the fall here. We have this area and these two. So we have lots of contacts in this area, in these areas, and we have quite large volumes of drops or bullish movements here as well. If we go back, you can see further price action, but this is enough. We have a couple ones here, a few ones here and here, and the most recent ones, this breakout here. So once you know that, now if we remove our line, you would see that this candle actually held. It closed approximately at the support, even though if we had based it on this candle wick here and slightly lower, and this resistance here and the support here instead. So if you, as you can see, it wouldn't have mattered. Price would have still, in this case, it held. It was above the support line, and then the buyers entered the market just as they did in this case, here, and here, the large movement, and here. So this was actually expected. So you wouldn't have been surprised that this happened. And then once it finally got broken down here on this candle, that we actually got the confirmation that now we're in a downtrend. So now price is completely under the 30 period exponential moving average, and you have it confirmed because the support is actually broken. Right? So now you see the difference why price action is important. It helps to get rid of the false signals, at least most of them. Not all of them, but most of them. And we can actually see this if we go to the 30-minute time frame, because that's when you're going to take your trades. So let's place a line here on this candle just so that we can see what happened there actually, and you can actually see that in that area there was indecision. The market was not trending. You can see this here, up and down, and it just kept bouncing up and down. So no trends. Half of the price is above the moving average and the rest is below the moving average. So the indecision is also, and the support is also seen, illustrated on the 30-minute time frame. This is where you're going to take your trades. So if you would have waited, if we go back to the daily charts, and you can see on the candle that I mentioned, which is, if we zoom in and take a look at it here, on this candle we had our confirmation. Once this bearish candle, red one, closed down here below the support, we finally had our bearish movement. Now before we go to the 30-minute time frame and start taking trades, because that's how you do it, once the trend is confirmed on the daily charts, you go to the 30-minute time frame to take your put options. So before you do that, you want to set your next target. This is something I recommend. In this case, you see that the next, because Michael recommends this in his strategy as well, that you got to pay attention to strong supports and resistance areas, because that's when price is gonna retrace back or act differently. So you're gonna look up for those areas in beforehand. So after this support got broken and since price is moving down, we're gonna set up our next target, which is here. Here's a stronger support because you can see the big volume. Not only this candlestick closed here, the red one, and this one opened at exact this position, but it was a large volume. This is the daily charts, remember that. So a large volume on this, and if you go back, you can see some indecision in this area. Price was jumping up and down, testing this area. So again, we see that. We see the resistance here, and then the breakout, the retracement down, and then the big volume. So we can go further back. You see the big entry of the bulls in this area. Again, a large candle was closed below this area and the sellers entered the market, pushed the price down, and that's pretty much enough. So now we know that after this candle, we know that price is most likely to move to this target, and as you can see, this support later got broken as well and became resistance. So in this area we could have good put options, and this is where you would go to the 30-minute time frame. Yeah, here you can see this. You can see how price was in indecision because you didn't have a clear trend, and then boom, we got our trend right after that candle below that closed below our support, our first support. Remember that? So once price comes back up to the moving average, when price comes up to the moving average and bounces off of it, that's our signal. So the expiry, I suggest you look at previous highs, because price will most likely move in a lower low and lower high position or manner. So as you can see, the first bounce was not from the moving average, but it was from the support that got broken, became resistance. Regardless, we can count the candles here to know how much time it took for it to drop. So for the next entry, we would have an idea of how many hours it would need. So you can see here an hour, 2 hours, 3 hours, about 4 hours was good enough. So the next touch here, once this candle closed below, we could have entered for another 4 hours, which is 1, 2, 3, 4, and this is pretty much a good trade, a lot of leverage from up there to down here, and then you got another chance here again once price came back. But it depends on your risk appetite. Maybe you don't want to take a trade at the same area again, because when price tries the same level several times, it's risky. It can eventually get broken. So you had one trade here, that's pretty good, and then your next opportunity was up here. This candle actually got up there and then came back, start to move down. And you could enter for another 4 hours here, 1, 2, 3, 4 hours. So always look back and see if the patterns are changing. So you could have seen those, even if you didn't take these trades, you could have looked back and seen that 1 hour, 2 hours, 3 hours, 4 hours would have been good even in this area. So price is still respecting that drop. And you had a lower high here as well, but this one wasn't close to the moving average, so you wouldn't have taken it, but you could still use this to calculate your expiry for your next trade. So in this case, 1, 2, 3, again another 4 hour was good. So once you got this opportunity, you could have given it another 4 hours. And you also have to take into consideration the time. If it's getting too late and the market is losing volatility, and you can see it was losing volatility in this area and tightening up. And also once we get near our support. So this is what I want to show you. Check this out. See what happened. This is our next target. Let's go to the daily charts quick here just to show you. Remember, we set up this line to be aware to not take trades once it got there. So see what happened. Now we can see our next support was reached, and our last opportunity was here right before the support. And here we could have this is also a good indication. When price comes down, it doesn't completely reach the support and retraces back up, comes back within the moving average. So perhaps you would have entered after this candle, and again an hour, 2, 3, 4 hour would have still worked because of recent price action. So again, this would have been your last trade, and then you would see that price is dropping to the support. And what happened was that it came back up, and after a couple of attempts it reached out. And this is why it's important to have your target, so you don't get caught into these areas when the price finally moves across the moving average. But as you can see, the support got broken and gave you more trades. So you can see here again another 4-hour expiry that would have worked. But be careful, check your targets. And once this was broken, so what would you do? Obviously you would set the next target. You can see this here. The next target would have been here based on these two. Remember, we don't know about this. We know about this. We know about this one and this area. So if we would adjust it to this big volume here and this candle wick and these two, so we would have gotten exactly the next position. So that was for the bearish positions. Obviously it's the same for bullish positions. If we were here and price was moving above the moving average, we would have waited. Once it crossed the first resistance, like in this area, came back and this candle closed above support, the next one was moving up above support, the resistance was broken, became support, then you would have gone to the 30-minute time frame. You would take call options instead above the 30-minute above the 30-bar moving average. So that's how you do it. Remember, set your price action levels, set your support resistance targets, and trade according to the lines, and be careful. Go and check the daily time frame from day to day, so you know how far away you are from your targets, so you don't get caught into the indecision areas and false breakouts. So that's all for now. Again, I put the links below in the description, so go check them out, and don't forget to like and share the video and subscribe, and I see you next time. Thanks for watching.